Is it working? All right. Took a minute. I don't know why the button was stuck, but we are here. We are live. At least it says it's live. Oh, it's not going live on X for some reason. Well, sucks to suck. We are here, Matt Money. Hopefully, you guys are doing well. Welcome back to the channel. Nothing really scheduled for today, other than we've had a phenomenal run in the past week associated with Palantir. We've had a phenomenal run with respect to Rocket Lab. Both positions are maturing very nicely in the portfolio. Overall, good week, up at all-time highs. Even though I've taken some trims off of some of like the oil stocks in the portfolio's basically at all-time highs. So it's nice to be here. Nice to see all of you guys, and hopefully I can hang out, answer some questions that any of you guys might have. That's pretty much it. So it'll be nice to just hang out for a little bit. I will be live again on the Finance Junkies, which is taking place at 6 p.m. Pacific, which I guess is 2.5 hours from now. So it'll be nice to be able to get onto there. Not exactly sure what the contents of the Finance Junkie will be, but it'll be nice. Hopefully we get a few folks on there. If there's too many people, I might just head out early, like it's not that I need spotlight or anything like that, but like, I'm not just going to be sitting around if there's like 6 or 7 people there, no offense to Carlos or anything like that. I'm just, there's just, I don't need to be there. Right. There's just too many other people. And, I have other things I could be doing on a Saturday night, like doing my own like stream, like hanging out with you guys and chatting. But I'm curious to see what happens, man. We're on the precipice of a very different change that we've seen in the market over the past 18 to 24 months. We're going to start entering rate cuts going into next week. So my thought process is, I don't know, fingers crossed that we have a 50 basis point cut. But you never know. A lot of people are starting to think that the data is coming in a little bit more scarce. So maybe we'll only do 25. I would like to see them get 100 basis points before the end of the year. So whether that means they do 50 basis points off the bat or 25, for the next November, December cuts, there's only 3 meetings left. So there's only so many ways you can get to 100. And so to me, I think the difference between 5.25 and, 5 or 5.25 and 4.75 is not much. So I feel like you have to exacerbate that by testing the sentiment of a 50 basis point cut. But the problem that I see with a lot of this is always that they're acting off of the delayed data, and so you're literally moving an economy which has 350 million people, or I guess if you're including all the illegals that have come across the border, 375 million people, maybe closer to 400 at this point. And if you think about that perspective, it takes a while to move that ship, right? It's like moving the Titanic, right? You have to move a couple miles ahead of time before you're actually able to get the boat steered in the right direction. If you think about it, it's like a battle destroyer. It's like an aircraft carrier. You really have to think about how it's going to move way ahead of time before you actually get to start seeing things in that area. So just trying to think if there's anything in the portfolio other than oil that I'm really like ceasing on. Nvidia's kind of come back nicely. We saw Christopher the Patel, man, myth, legend, flip-flop on that. And he did a good job explaining that on Cash Flow Chronicles. So if you guys haven't seen that piece yet, feel free to go ahead and do so. He talked a little bit about that. What was that on Wednesday? And so hopefully we could potentially have a stream tomorrow. Maybe would be nice to kind of kick off the week, because normally we try to do 2 a week, and unfortunately we weren't able to get done one. I never asked him yesterday or today if he wanted to do one, but I decided to do a solo stream instead. Trying to think if there's anything else within the portfolio that's really changing all too much, getting strapped up, ready to potentially look for another investment property. So that's been a lot of fun. My sister's done a phenomenal job. I don't think she's watching, but kudos to her. She's done a phenomenal job managing the most recent place that we bought in May. And then, of course, the other place is kind of on coast we just reach out to the cleaner, man, and see if there's anything that needs to happen and send supplies if we need it. And they do a phenomenal job in that respect. So can't complain with it. It's for being, I don't want to say an absentee owner, but really, we manage it from afar, and we have folks on the ground that kind of do a lot of the physical stuff. We kind of do a lot of the check-ins virtually, and deal with any sort of problems that they're dealing with, whether the AC is slightly down, or if the for some reason the refrigerator, people, I don't know what they do, man. They buy like 8 cases of beer and they think they can cool all of it down at once. It's like, my guy, like, you can't completely fill a refrigerator 100% with like groceries, right? You have to have some airflow, otherwise things aren't going to cool down. They'll like block off the vent in the back, and they're like, it's not cooling down. I'm like, you have to have the vent available to bring stuff in cold air from the freezer. Like, so that's a lot of times what people end up doing. I think we might need to do some adjusting to that fridge configuration to make sure that people don't put cases of beer up on that top one. But it is here. It is what it is. So hello from Dublin. That'll be great. Hello from Houston. I will be in Europe next weekend. That'll be fun. And unfortunately, I'll be working the majority of the time, and it's only going to be a short trip. I was deciding if I should stay the weekend and potentially go out to Ireland, go out to Wales, go out to Scotland, and I don't know, man. I just decided against it. I don't know why. I had to book it. I was dragging my feet booking it, and I don't know. I was just like, you know what? Once I'm done my meetings on Thursday, I'm just going to fly home Friday. And so, unfortunately, yeah, I'm not going to be able to stay for so long. And I think what ends up happening is I always have good intentions when I go to Europe for work to spend more time and go see things. And unfortunately, this time around, I was just like, I think I dragged my feet too long, to the point where I'm like uncomfortable trying to so quickly that, I looked at so many different things. I was like, maybe I'll go to Greece, maybe I'll go to the Amalfi Coast, maybe I'll go to Scotland, maybe I'll go here, there, that place or the other. And I was just like, you know what? I'm just going to come back home. Maybe, and I need to get my passport renewed as well. So that's another piece about it, is this bad boy's getting a little dated. And so I need to get this bad boy updated. So once I get it updated, maybe I'll be a little bit more inclined to do a little bit more traveling, because I won't have that short-term 6 months. Excuse me. Sorry, big yawn, big man. I won't have that 6-month countdown because the singing expires in May. So by the time it gets to November, I kind of have to have it. Have it all done, So anyway, let me hang this up and turn off this, and we can just have a quick chat. So thanks for the 44 of you that are on here. Hopefully you guys are having a great week as well. Whose portfolio is up at all-time highs? Raise your hand in the chat. Say, give us some ones, give us some W's or something like that. I'm curious to see who's doing well. But let's go through the list. So we got Fit. What's going on, my guy? Thanks for the continued support. Hard to get excited about any individual positions at these levels. Curious to see your picks. Yes, sir, Matty Mula. Yes, I was just finishing up with Vince, so that is why I'm a bit late. Not taking a leak. I do have to pee, though. That's for damn sure. Would be curious to hear you're still holding TQQQ. Obviously not wanting to buy at these levels, but keep them up. Keep them on UPRO on the watch list in case of a sharp pullback. I actually do still hold TQQQ, and I think it's one of those ones that, like you said, and a pullback is always kind of nice to have, because especially if you have like these very rapid pullbacks, because you can decline really quickly. Like, by no means, we went from $81 to 58. So what is that in terms of the decline? I'm not good with math, so I got to pull out my calculator. So 58 divided by 81 minus 1. So that was a 28% decline. Divide that by 3. I don't think we went down 9%. But that's the thing, is when you go down so rapidly with something like a TQQQ, and actually had a phenomenal conversation with the CEO of Granite Shares, who does like the triple leverage Palantir, sorry, not triple leverage, 2x Palantir. He does double NVIDIA with NVDL, and he does a few other individual stock leveraged ETFs. We had a good chat about this, which is like, you almost have that compounding effect. If you were to have like 9 or 10 negative days in a row, it's going to be awful, versus if you have 10 positive days in a row, it's going to be absolutely spectacular. You start compounding depending on what way you go. And so he explains a really good reason why. But yeah, I'm holding on to TQQQ, and my thought process is you saw 2022 here, this massive drop. I don't expect to see 30% cuts most years. And so that dropped the price down from like 80 something bucks down to like the $17 range, if I remember. So that's a massive decline. That's like an 80 something percent decline. So let's do 17 divided by 82. Yeah, it's like an 80% decline. So not many times will you see a 20 to 30% cut in the entirety of the market within the matter of a year, to the point where you would have this large of a drawdown. So my thought process is yes, it's taken us all this time to get back to all-time highs. I think I'm like 20-30% up in my position in TQQQ. But my thought process is, you know, some years you'll have 10% pull down, some years you'll go 10% up. But in the long term, if you hold it over the course of a decade, my thought process is you're going to have way more up days than you are going to have down days. And with that, you should pull out a really good return. And I think a lot of people neglect, and some people say, well, this is BS, you can't really account for this. But it's like, I mean, if you were to look at this long term, how much it's grown, and this is just from like 2010 timeframe. So you remember, we were in one of the best bull cycles of all time, going from 2010 all the way to 2020, basically. And before we had this quick recession here, even if you wanted to call it 2018, because we did have a big pullback in the winter of 2018 as well. But even if you want to say from 2011, 2010, all the way up to 2020, you had this massive growth. Then, hey, man, like, I anticipate we're going to be in a good spot where we can continue something like that. So anyway, it's, I guess, to the eye of the beholder. And my thought process is it's a gamble. If you could get something like this, even if it's not even a 16,000% return, even if it's a 4,000% return or 2,000% return over the course of 10, 20 years, that's life-changing sorts of money, to the point where you'd be talking about millions upon millions of dollars generated. So my thought process was, why not put 50, 60 grand in it? If it does get a fraction of this sort of growth over the next 10 years, then you're going to be sitting in a hot spot. If it doesn't, what did I lose? 50, 60 grand? And to me, you know, I'm okay with that. You know, it happens to all of us, and sometimes we make mistakes. What's going on, So Cold? Hope things are going well. We got Hot Johnny. We got Adam King from Ireland. I'm your Saturday night. We got, hopefully things are going well. We got AK Willie. Yeah, Rocket Lab Weekly, my guys. It was just on Vince's channel. Can NEXT take a break? I'm not done buying. That's a good point. We got Fool's Gold up in the house. 21. Keep talking. From Scotland, Mr. Walsh. Welcome, my friend. Do you slow down your normal dollar cost averaging when sitting at all-time highs? Those are my questions for the day. No, feel free to continue to ask questions, man. All questions are welcome. You know, where I don't really slow down my DCAing is in the S&P. You know, I've slowed down my Palantir investments. I've slowed down my Rocket Lab investments. Generally, when the stock starts to move a good bit, I'll slow down my investments. It really just depends, right? Like, I was about to start dollar cost averaging back into Google, but that started to take a move to the right, up and to the right again. So I stopped doing it on Google, or didn't even end up starting to initiate again on Google. So it really just depends on what stocks are and where they're at that particular time. there's no one size fits all, right? I could feel comfortable investing in the S&P, you know, right now. It really just depends on where I'm going to park that money. And it might lose money in the short term, right? But to me, it's more about parking the money and forgetting about it in some cases. But it also depends on, what does it look like comparatively to the other investments that are out there. Like Palantir right now, it's kind of expensive in my thought process. If it comes down in terms of valuation, you see some really good growth over the next couple of quarters, and it was still at 34, 35, it might end up being something that I continue to dollar cost average into, versus right now where I feel like it's a little bit overvalued. I just can't drive myself to do it. I would much rather potentially look for saving that cash and putting it aside for another beach house, or really just depends what else is out on the market right now. And there's also some like I took some small 401k loans. Um, for the majority of the time, what I do when I buy the real estate is I mostly fund it out of pocket, but I will take some small 401k loans for like 10 or 15 grand or something like that. And a lot of that's just because like it really just like helps out a little bit. And then it's like, because you pay the loans directly out of your paycheck, it's like almost like it's not even there. I mean, that's a bad way to put it, and I don't think that people should think that way. But it allows you to kind of continue to grow the amount of potential real estate that you own much faster. And so generally what I do is, I'll do that. Then I pay down the 401k loan as fast as possible. Um, anyway, to me, it's a tool that I'm going to continue to use to be able to capture 50, 60 grand. I guess a max is 50 from a 401k loan, but take 50 grand to be able to leverage and get a property and then pay that off quickly over time. So, Rocket Lab is going to zero. Glad that we're all on the same page. We got Junebug in the house. Am I still on Rocket Lab Weekly? So what's going on, Hot Vince? Big Dick Vince. Last couple of Airbnbs got the hosts have asked me to cancel and book off site. I'm sure against the rules, but thoughts. It really helps. Depending on what you want to do, it really also depends on, it is against the rules. I'll just state bluntly, but if you form a relationship with somebody and you chat with them and they want to reach out to you personally, I don't think there's anything wrong with that. I never really would personally have someone cancel just to specifically reach out to me personally. But I have had people do it. They reach out to me, then they cancel, they get my number, then they cancel, and then they book. And what am I supposed to do? Say like rebook through, So it really just depends. Airbnb is nice because they give you air cover, which is like their insurance basically up to $1 million. So that's nice. Sometimes they side with you, sometimes they don't. Sometimes you try to reach out to them. They're like, we know that this person left you a bad review in retaliation, but things are the way that they are. So unfortunately, you can't really do anything about it. So it just really depends, and sometimes it's nice because Airbnb will have things tracked right in a specific setting, so it makes it very easy. They can look at the chats, they can do everything, but if something goes off site, you really have to trust the other person, because what happens if they trash the place, so you really have to think about what's actually going on and who you're trusting. And I would love to get, because there's always the problem that I see with a lot of this is there's always the problem that some places have had where they start installing HOAs that start to run the neighborhoods. And then you have to check in, or is there a neighborhood pool? And you can't go to the neighborhood pool, even though you used to be able to. And so I've seen, excuse me, some really bad communities basically put into effect no Airbnbs, and excuse me, and really changed the dynamic as to why people were investing and buying into that area in the first place. And so you have a lot of people like in the locals, if you have a town like a beach town, that there's a lot of locals that live there and they might work, more common jobs, that they might not be able to afford some of these homes, and then they get upset because they're cost out of their own homes. And it's unfortunate in some respects, but I've seen places where Airbnb completely gets kicked off. But if somebody's reaching out to you directly through Facebook, otherwise, then you can bypass that, right? Because it's not technically through Airbnb at that point. So um, I would like to get to that place, because not only that, but I'd love to have a house where, and we try to do it in the first house that we bought in 2022. We've had 2 return customers this year. Hopefully, we get some next year as well. But the problem is with Airbnb is it's kind of like first come first serve, to an extent, versus if you kind of do it offsite. Like, I want to try to do a little bit more. You reach out to people, be like, "Hey, are you interested? Are you not? Give me a $200 deposit. Like, we'll figure this out." Versus Airbnb, it's kind of like you're just open for business and people come as they want. So there's pluses and minuses with both. You have to pay a crap ton more in fees with Airbnb and VRBO. And so with that, if I do offsite bookings, I don't charge that, obviously. And so I try to relieve them from that. And obviously, as well, because you're not booking through like an official site, hopefully the IRS isn't listening, but you don't really have to pay occupancy taxes. And so that helps as well, to the order of 20 to 30% for certain people on specific sites. So I try my best not to go through the sites, but they also provide a lot of visibility and a lot of backbone and a lot of logistics that otherwise you probably wouldn't be able to rent out the house. So there's that. So I need to see Palantir pull back to the 50 to 100 day. Buy a cheap freezer, toss in the garage for booze. You talking to me? I'm confused. Ahad, what's going on, my guy? David, what is going on, my guy? The Europeans are exchanging. Any must-have food in Europe? I had warm beer when I was in undisclosed European location. Any other? The steak was only okay. The country I go to for work isn't really known for their food. I'm trying to think if there's anything there. They did have a good convenience store called Greg's that I really like. So shout out to the folks that know who and what country Greg's is in. So I thought that was pretty good. Nice little quick convenience store. Anything else? The Indian food is really good. The few places that I had it there. What I will say is takeout was very expensive comparatively to the United States. And the United States does have expensive takeout. If you come to Ireland, you better meet up for a beer, 100%. I'm bailing out and visiting you again. Unfortunately, I'm too lazy to go to Sweden. So we got Big Dick Dublin. Awfully, I don't even know where that's at. Let's see. Still haven't gotten your real ID. You got to get on that, my guy. Luckily, Texas was on it. Last time I got my ID issued, they gave it to me. Adrox, what's going on, man? I was till Trump said Taiwan had to pay for defense, but I'm still up better than S&P, but not near as much. Hell yes. The market is pissed. Yeah, man, Google's a good one, man. I'm a big fan. Let me see. Good at these levels. I like Google, man, but Google I don't think has enough risk for you. So you're probably not going to like it. Let's look at Google. Because it pulled up a little bit. It's like mid 155 again. Oh man, talk about a movement. Talk about movement. I was literally chirping up because it pulled back pretty aggressively from like 168. Keep in mind, this thing was almost at 190, 195, 3 months ago. And then they pulled back pretty drastically to the 148 range. And I was like, ooh, I'm going to have to start dipping my toes. And considering I already have 380 shares of Alphabet, I was like, I'm going to get to 400. 400 would be a nice round number. And then lo and behold, a pop up. What is that? Like a 9 or so pop up within the matter of 2 or 3 days. So there's that. Sometimes you gotta buy it when you see it. So hard to buy when those dips are so brief. Exactly, man. Like sometimes like, oh, let me just give it another day, and sometimes that other day was just too much. Matt was with you all the way through, Vince. So rude. 100%. 100%. I want to get into NVIDIA spreads. I know some people pulling out the NVIDIA spreads, my guys. Yeah, like Chris Patella, I think he was telling some people about some spreads. Let's see. Yep, NVDL. Yeah, a lot of people are getting caught with the covered calls and Palantir, unfortunately. Myself included, by the way. So I'm not alone in that. I'm like 33, so I'm hoping we have some pullbacks. Don't have any NVIDIA, but I have a small group fund where we own a small amount of NVIDIA. I never had NVIDIA either until I sold Shell, and once I sold Shell, I put a little bit of money into NVIDIA because Mr. Fiorillo told me to do so. My money is going to zero, my guys. Always to zero. Oh, man. That is sad to hear. 17,500 to 6,500. That is sad. Buy more Rocket Lab 5 shares is like buying £1 here and will appreciate more. I agree. I think in the long term, it will appreciate more. At least in the medium term, it will. I feel like you can see just from the data, right? The data. I feel like going to 15 is my short term target for Rocket Lab. For Palantir, I could see us staying in this range for a while. It really just depends on how aggressive. But I could also see us going to $40. Sometimes when stocks are on their runs, they're on their runs, and you can't slow them down no matter what. They continue to get more exuberant. You're paying yourself. Yeah, the thing that bothers me a little bit with the 401k loan is that like you still are paying interest per se, and you're not 100% invested in the market, which kind of sucks. But interesting hearing about long-term holding TQQ. I figured it's a risk, man. People tell me it's a dumb thing all the time, but haven't lost all my money yet. If someone took all your holdings and put them in a Rocket Lab, would you shit yourself or go, okay? I'd probably shit myself, but that's a lot of money. I mean, it's 7 figures, right? So, if I were to like have to keep it there for 10 years, I would thankfully thank whoever did that. I feel like just based off of where I believe from a technical standpoint and a company execution standpoint, the company is going, and I think they're doing well. But I'd probably be shitting myself the whole time because the swings in the portfolio would be $500,000 swings over the course of a couple of weeks or months. QLD is another cool option. 2x leverage of the Qs might be safer too. Just building a war chest of cash right now. Yes, my sister is very much adamant about real estate. She doesn't really like the stock game, and so like no matter what, I try to like convince her to buy more stock, and she's very much adamant about real estate. So if that's the case, then it looks like we're gonna have a partnership associated with that. So I'm gonna keep going with that. Rocket Lab good under what price to start a position, but waiting to start a position, it just keeps going up. Well, it depends, my guy. I think a lot of people think about this wrong, right? You got to think with the end in mind. Where do you think the company's actually going to go, right? Do you think it's only going to go to $15, or do you think it's going to go to $50 or $100? And the stock price itself doesn't matter. What matters is the market cap, right? And yes, you can have diluted share counts, etc., and that plays a factor into it as well. But don't Don't chase pennies and lose dollars here, right? And a lot of people do this where they're like, ooh, I was going to buy Palantir at 28 and it only got to 29. And you're like, well, what do you think in the long term? I think it's going to be $1 trillion company. It's like, then what does it matter if you bought 28 versus 29? So you can get 3% more shares. Like, don't lose out on an entire opportunity by chasing pennies. And so the reason why I'm not adding here at $7.50 because I have 19,500 shares, and I'm also getting close enough to my like $100,000 invested goal that I'm okay. The position's worth way more than 100,000 now. It's just how much I'm willing to invest into the company. And so it's like, well, does it make sense to buy more at 750? It's like, well, my cost base is $5 pretty much. So if it was at 550, I'd be buying. If it's at $6, I'd probably be buying. But am I going to buy at $7, $7.50? No. But that's not to say that you shouldn't, right? I mean, it really also depends. Like, I think that Rocket Lab will be a $50 billion company. And if you just look at Rocket Lab today, with its current market cap, it's what, a 3.5? Let me see. 3.5, $4 billion company. Let's see. Yeah, $3.7 billion company. So if you think it's going to 50x from here, let's see, 50, not 50x, go to 50 billion, 3.7 divided by 3.7, it's going to 12x. So does it really matter if you buy it at $5 when it's a $2.75 billion company or a $3.75 billion company? If it's going to $50 billion in market cap, the answer is fucking no. And if you think that the answer is yes, reevaluate your head, because you're talking about changing, getting maybe 20, 30% more stock overall than potentially missing out on the entirety of the investment. Hello from Glasgow. John Wolf, thank you so much, my guy. Nice little $10 euro. With crypto and stocks, I've always had a problem with when to sell. When do you specific plan to sell, or do you just wait and see? Love my stuff. Keep it up. Much appreciated, man. Really appreciate the 10 euros. To me, man, I always enter a position with the end in mind, right? Like, where do I think the company's getting to? Like, for example, I bought Google, not because I wanted Google to go from the $88 that I was purchasing at to $200, right? That's very short-sighted. I thought about it and I said, man, I would love to put 50 to 60 grand into Google, because I think eventually it's going to be a $5 trillion company. And that's a very forward, long-term look at where Google is, right? And Google is probably at, I'm not good with math, so let's just look at it, or Alphabet rather, is a $1.94 trillion market cap. At one point it was like 2.5 when it was back at like 195 bucks. So I could still see a place where this goes up 2.5 more times. And at that point I'd probably be like, all right, 5 trillion, that's a lot, and part of that's inflation, part of that's keeping up with inflation and making sure that my dollars are invested. And even if the dollar inflates, that, it's still invested into something that has value in it, rather than it just sitting in a bank somewhere, losing value on a day-to-day basis. But it really just depends. Like for Bitcoin, I'm not just sitting here with no thought process on when I'm going to sell it. I have Bitcoin's a little bit more interesting. I want to hold that for the long term, but Bitcoin's very cyclical, kind of like oil stocks, right? I'm not saying I'm out of oil stocks forever. I'm going to reevaluate oil stocks, but I'm short on oil right now. I don't think oil is going to do well over the next 6 months to a year. And it could get down to $50, $40 again. And if it does, then I'm probably going to be a net buyer of oil. I just think that from right now at the high 60s to where I think it's going to go, which is in the 50s, I just think it's more likely to go down than it is up at the moment, if you take out geopolitical risks, which are always a factor. So that's something to consider that might happen and warrant the thesis wrong. But I just think all evidence points to an oversupply in oil right now. And the demand is still very strong. It's just we have an oversupply and investment. So in that respect, like for Bitcoin, I sit there and I'm like, all right, the rainbow chart is saying X. Do I believe the rainbow chart? Generally speaking, it goes up a couple X from where it peaked last, and it peaked in $60-some thousand in 2021. And to me, that means we're probably headed anywhere between 120 to $240,000 for Bitcoin. So I'm going to sell probably when we get to 150 to 180,000. And I feel like within the next 9 months, we'll get there. A lot of people they're like Bitcoin is doing garbage. If Bitcoin was going back to zero, I think we would already seen it by now. I'm a firm believer that we're continuing to consolidate Bitcoin specifically. And in the long term, in the next 9 months, I feel like we'll see a short-term peak. So to me, this is where we're at, right? We're in some sort of consolidation period, and eventually we're going to hit some sort of peak. Whether or not we come down again, maybe we come down a little bit again. But to me, I feel like we're in some sort of place where we're going to continue. I forget what it was, but it was early 2020 where we had the halving for the last time, and look how long it took. Like, it took almost 18 months for it to fully go through. I forget when we had the halving. Was it like earlier this year? I forget when it was, but basically we had the halving like at some point over the last 12 or so months, and since then, you really haven't seen Bitcoin spike up too much since that point. So I think there's a lot of potential, and this is just some of it. Like I said, I have a little bit here. I have a lot in Coinbase, just kind of sitting there. So what I'll do is what if it goes to 150, 100 some thousand, I'll sell. I anticipate we'll have a pullback, and worst case, it doesn't, and then I miss out on a potential next leg up. But to me, I think it's an opportunity to potentially buy another property, which is nice. It's not like I'm going to blow it on a Lambo. As much as I joke about Lambos, I don't think I'd fit in one, so it wouldn't make sense. Maybe I'd buy like a nice SUV or something, like an Escalade or something, but it just doesn't make sense. I'm not a big fan of cars. I'd rather, invest it in more stocks, and I like cash flow a good bit. Maybe I'd go on vacation or something, but I don't think I would really just like frivolously spend whatever money I would make. I would wait until it pulls back at the end of 2025, early 2026 for Bitcoin specifically, and then slowly dollar cost average into it again. And that's currently the thought with that. But it really just depends. Like, what else? Like Palantir. I think Palantir is easily a $200 billion company within the next 5 years. If it went to say like a $500 billion market cap, I'd probably sell all of it, especially if it did that within the next 5 years. Not to say that it couldn't go to $1 trillion. I think it could, but you just have to recognize like where does the upside and where does the downside fit, and where does that fit within your risk tolerance? It's not to say that because I think it's a sell or because I'm going to sell my Bitcoin in the next 9 months when it hits 120 to 240,000 that you should do the same. It really just depends on what you want to do and what your tolerances are and what you're looking to do. So anyway, not planning to soon sell Rocket Lab anytime soon. That's good. Yeah, right. Ready to buy Rocket Lab right now. Australia, that's awesome. That's really cool. Do you have crypto price stars saying 200K, but I'm not planning on selling at least need the money for a down payment. Love that. Love that. Love that. Love that. I'm not selling. Haha. I'm taking a mistake. Making a mistake. What do you think of Airbnb? I don't know what it dropped down to. I know Arnie's into it. I don't think it's a bad stock on a trailing 12-month basis. Actually, produces a crap ton of cash flow, and I'm actually starting to use their business model a little bit because, as we were talking about earlier, I'm starting to take direct payments, and when you take direct payments, we take deposits, and some of that's like 50% deposit. Up until like a week or 2 weeks out of your reservation, we expect the full deposit to be paid. So we're putting all those deposits in like at the moment like a money market account, and so the hope is generate a little bit of extra income. And if you think about it, it's like even if you're only making let's say 15% or 10% on the actual cash on cash return, if you put all that cash into the bank, then you're increasing your profits by a significant margin, at least right now, because money markets are paying 5%. And so it's nice in that respect. And that's what Airbnb does a lot of times right now. So I'm curious to see, one thing I'd have to analyze is how much cash and money does Airbnb actually make from operating income, because a lot of that's going to disappear once you actually start to have interest rate cuts. Because what they do is they take in a lot of money in the fourth quarter and the first quarter, because people are booking for the second quarter and third quarter of the following year. So you have all these payments that's sitting there for 6 to 9 months before people actually use them. And the whole time Airbnb is just getting monthly checks. While that because from an Airbnb guy, you might be like, that doesn't make any sense. Airbnb takes in the money, you pay it day one, if not a fraction of it day one, and they pay it to me 2 days after they check in. So they could pay in December of 2024 for, let's say, June of 2025, and they hold all that money for that booking from December of 2024 until 2 days after they check in June of 2025. And they're collecting a check off that the whole time, 5% off of 6 months of it just sitting there. So in that respect, they're making a crap ton of money just specifically from holding the host's money, being a middleman. So in terms of the stock, I'd have to look at it again. I don't think it's a bad stock. I don't think it's horribly priced. But once again, I would want to check what the income is going to decrease if we go to like a 2 to 3% interest rate environment rather than a 5%. You love me. Have a good weekend. Thanks, TL. Much appreciated, man. You're probably already gone. Mistake. Yes. Warm fucking beer. Yeah, I wasn't the biggest fan of the warm beer. When is the best time to roll a cover call? Should you generally just wait until expiration, or is there ever time to do it early? You got to be careful, man. You got to look at whether or not the company pays a dividend or not. And generally speaking, if it doesn't pay a dividend, then I would make sure you roll it a couple days ahead. But you always have that little bit of extrinsic value, right? So say, for example, you're at a $30 covered call for next week. Let's look at it. Whoops. Yeah, let's look at it. For Palantir. Because I know a lot of people are stuck with Palantir right now. So Palantir, let's pull it up. So let's say this upcoming week. It is the 20th. This upcoming week, you have it stuck at 33, right? And it's 270. So what does that mean? So at 270, it basically means it's trading at value. Pretty much. There's no extrinsic value because you're adding 35.74 is kind of the break even. You're trading at 35.73. So basically, you're trading at value. How do you want to roll this up? So you have this 271. One of two things can happen, right? It depends how badly you want to get out of the position. Say you wrote this initially for $100 or $1 in premium, and now it's 271. You could walk away from that entire $100 in not $100 in premium, but I mean, you could walk away from that and really just like roll out forever. Let's just say, for example, so you could give up that whole $100 that you did and be like, I just need to get $1.71 just to get out of the trade. Then you could look for the next week and be like, where is there $1.71? And you roll it. Then you're at the 34.5. So you've rolled up $1.50, and now your break even's $36, right? There's that piece. So I would just look at that. Then it could be very much like you're looking at this and you're at 34.50. And you recognize that there's $1.79. So there's a lot of extrinsic value here. Does it make sense to roll it right now? The answer is probably no. You probably want to wait a little bit, because what can end up happening is you could almost like compound on top of yourself, where you have all this extrinsic value that now you're trying to roll out on extrinsic value, when in reality, you only from here have $1.20 or so, $1.23 of intrinsic value. So basically you're giving up in this case, 50 cents worth of extrinsic value that you could just sit on. So it really just depends what you're into. But to go back to that original example, at the 33, you were at $2.71. Here you don't see 271, you see 290, you see 250. So you might say, well, shit, no, rolling out an additional week wasn't enough. Let me roll out 2 weeks. So, oh, they're starting to introduce the 50 cents. I like that. I like that. Let me hide this. I like the 50-cent pieces. I have to keep that in mind. So you're looking for 270. So this 33.50, when this comes out on Monday, you can see you have 310 and 240. In between here, you might be able to roll the 33.50, and that's the case. The thing that I'm seeing here, though, is two things. You're seeing the slowdown of intrinsic value. So back in the day when these things were mooning, right after the earnings call and after they released the 30% growth, and then also after you started seeing the S&P 500 inclusion and it went up to 32, 33 bucks, the IV of those contracts was at 70, 80%. They're slowing down to 40 something percent, meaning you're not getting nearly as much premium and extrinsic value for the same contracts as you were. They're saying that the volatility of the movements is shrinking within that certain amount of time that you're looking at. So in this case, you're looking like within a 2-week time period, the volatility of how quickly it can move has shrunk by an order of magnitude at this point. So you're not going to get nearly as much premium. So in that respect, you kind of just have to think. There's another piece that I mentioned, so that's just another thing to look at, is maybe these 50-cent pieces for Palantir will help you. Another thing to look at with covered calls, though, is if it trades with a dividend, and then you have to be conscious of when the company goes ex-dividend. So, for example, the S&P 500, if you were to look at SPY on a quarterly basis has an ex-dividend. So you might be underwater on this, but since it does pay a dividend, 4 times per year, you might have to be cautious that you're not underwater at that point. Because what could end up happening is, specifically for the SPY, let's look. And I want to say that this upcoming week will be an ex-dividend week for the SPY. But let's say you're looking at a September 25th covered call and you're at the 550. Well, maybe let's do the 540 as a better example. So generally speaking, the dividend for SPY is $1.70. Let's just say sometimes it's $1.50, sometimes it's $1.90. It's not always verbatim the same. But you're looking at 540, so $22 for this position, and you're at 562 break even. So let's just say, for example, this plays out, right? So what you're saying is, and what people might end up doing is, when it gets to the ex-dividend date, you need to own that position by the ex-dividend date. Oh, I'm not even sharing. Sorry. In this particular case, you're looking at the 540 expiring in 2 weeks. And I anticipate that the ex-dividend date, I think, is the 20th for SPY. So in that particular case, you're talking about whatever the 540 is plus this $22. So you're looking at 562. So in this particular case, you're talking about 90 cents of extrinsic value. You know that you're at 561.65 for the stock. If you include the dividend for that, add $1.70 on top of this. So you're talking about 563.30 or something like that. That 563.30, which includes that $1.70 in dividend, is more than this 562.49, meaning that people might exercise this early because you would be able to capture that difference in the 563.30 minus your 562.49. You'd be able to capture that 80 cents. Now let me explain that again. You have a 540 covered call. Say that this stock stays the same price and everything like that. Let's just say it's September 19th. Tomorrow will be the 20th. Tomorrow will be the ex-dividend date for SPY. SPY pays $1.70 in dividends. So you're looking at 563 price today. You're looking at a break-even price of 562.49. You're looking at the price today. You're saying, well, 561.65 plus the $1.70 in dividends. That's 563.30. That's better than the 562.49 break-even for this contract. So that person would obviously call up, because that means you're underwater, basically. This person would call up the brokerage and say, I want to execute this. Shares early. They get called away early. Why? Because they get that $1.70 in dividends, and they still get this 561. And right now, their break even is 562. So really, they get 80 cents in extrinsic value. They could sell it, basically, that day. And once they sell it, then immediately, if it, say, doesn't tank to 560 or 540 or whatever, if it doesn't tank and it holds at 561.65, then they could sell it that day for an 80-cent profit per share. So they would probably do that. And so a lot of times what you'll notice is if you're underwater on a lot of these things, and it doesn't even have to be underwater, it just has to basically, whatever dividend payment, if it meets more than the extrinsic value of the stock. So for example, let's do something closer. Let's do like the 520. Let's say it is 520. September 20th is the ex-dividend date. And let's say it's September 19th. It's not going to work, is it? Let's just say it's the 16th. So it's Monday, or it's the 17th or whatever. What this person might say is, oh, wow, we're at 562. It's $1.46 for this particular contract. That's less than $1.70. I'm going to execute this contract early. And they'll get the shares. They'll get the $1.70 per dividend, or maybe it's $1.90 or whatever. And they get that additional 45 cents or 25 cents or whatever in premium in that particular case. I'm not explaining it perfectly, but it's about what it would be. So keep that in mind. But I personally wait, generally speaking, till the expiry, or as close to, unless it's those particular cases that I mentioned. What portion of your portfolio do you write options on? Generally, any company I have 100 shares or more of. I don't really, what's the word I'm looking for? Discriminate? QILS. I'm going to say no, I don't invest in it. And that's not a ticker. That at least is on Robinhood. So, would you sell puts on Palantir? For sure. Yeah, I was going to sell puts on Palantir before the announcement of the S&P 500 inclusion, and unfortunately, I never did. Google's Gemini is impressive. Remember the guy that worked at Google and said he thought that the AI spoke to was real and had real intelligence? I agree, man. I think a lot of people are really undervaluing Google's intelligence and AI. You got a $40 strike on Palantir, but $750 on Rocket Lab for October 11th. There it is. I think you'll be okay on the Palantir. Rocket Lab, who knows what's going to happen with that, if it's going to keep mooning or what. Anybody else take off Friday to celebrate? I did not. I wish I did. Hot Sam, hope things are going well. Google 150, agreed. I sold 125. I'm not sharing anymore, am I? Okay. I did 125 on Google for like October. I don't know if I closed them. No, I didn't. I'm up 66%. I wrote these on September 9th. I wish I told you what the price of the stock was, but I think it was when it was $1.40 something. And so I wrote the $1.25 October 25th puts, and I got 91 cents a piece. And right now they're worth 31 cents. So I might just buy those back, just so that if there is a drop again to the 140s, I can rewrite it. Amazon under 170, I agree, man. Amazon, I think, is going to continue to do really well. The thing that's nice about Amazon is I don't think that they've tried to really make profit yet. I still think they're still trying to grow. Thinking of taking Palantir off for a down payment on a house. Hey, man, there's nothing wrong with that. You got to do what's right for you. You got to live somewhere. So I do have a question. At what point for an individual position do you say, okay, enough is enough? That's up to the beholder, right? $100,000, I think, right now is the maximum position that I would invest, right, out of my own pocket. I'll let a position run to $1 million right now. I guess I say that. I don't know what I would actually do if Rocket Lab or Palantir went to $1 million today. Palantir, I'd probably sell it because that would mean that's a like 6 or 7x from here, for sure. Rocket Lab, if it went to $1 million tomorrow, I would probably sell it because what is that per share? That's $50 a share. So yeah, that's so many years of growth ahead. That's what, 51 minus what was it, 750 divided by 750 times 3.7. So that's like a $21 billion market cap. It might be selling myself out, but if it happened tomorrow, I would sell it, right? Like, so I guess it's up to you on what you think is an appropriate sell time, like I can't answer that for you. $500 to me is a mistake, right? A small mistake. $500 to somebody else is a life savings. So I'm not trying to be an asshole there, right? It's just $500 used to be a lot to me. So I can't say if $500 investment's enough or not, right? Just like to me, like if Elon hears me talking about 380 shares of Google, he's gonna laugh in my face. So he won't really, but it'll just be like it's just a different game, right? It's a lot more zeros and ones than that he has and he's playing with than me. Mind talking about covered calls? Do you sell covered calls on all my long-term positions? I do sell covered calls, but I don't do it at the money, so I don't have any hate towards what TJ does. TJ does his own thing, and his portfolio is a lot more about making income. I don't mind making income either, but my positions that I hold are more so long-term gooses that I want to lay like small little golden eggs. So I'm going after just trying to get another couple percentage points a year. I'm not looking at trying to get 10 or 20% per year through covered calls or anything like that. So to me, I write them very far out of the money, generally speaking. So I like the 5 delta, maybe if I want to get aggressive at the 10 delta. And what does that mean? It basically means you're super far out of the money. But also it depends on where you are in the not the life cycle of the stock, but how volatile the stock can be. So one thing to look at is, generally speaking, companies they're always mobile, right? You can see these little peaks, troughs, peak, trough, all throughout here. You generally want to wait for a decent update to sell. If it's a big down day, even if the covered call is still actually not that far away, it's just because it's a down day that there'll just be more negative inputs into the option, and it'll cost you. So the next day you could be down 20-30% just because the stock is up a percent or something like that. So you basically just missed out on $20-30 on one contract just because you sold maybe a little bit early. So you kind of have to play a game of that. But delta to me, I mean, there's probably a billion different ways to look at it, but delta to me is, generally speaking, the likelihood that it's going to execute. So I generally, when I sell calls, I like to go to this range of between 95 and like 98. And the reason being is generally speaking, it's all statistics based off of the previous several weeks of movements. So that's one thing that you also need to keep in mind in the actual position itself. How volatile has it been in the last year in terms of like its up and down price swings? And that's going to be kind of what they're talking about with the implied volatility. So when you go back, S&P doesn't move nearly as much as, say, what Palantir might move. But let's just look like a week out to the September 20th. And let's look at the implied volatility. You're talking about 13%. So in terms of that entire time over the past week, it might move up and down, a total of 13% overall. So that's why it's a 13% implied volatility, because over the past, let's say, week, the whole movement combined is, say, 13%. We just looked at Palantir and it was at 40%. So much more larger wavelength swings. And what does that mean? It basically puts a cone around the stock. So if you were to kind of put a forward cone of trajectory around where you think this is going in terms of like future trajectory, it could continue to go up, it could go sideways, or it could kind of go down. And so what that does is it takes all those kind of Greeks, if that makes sense, and it looks and sees, okay, based off of the previous week, if that's what you're writing on, or if it's a month or 2 months or whatever, this is what the kind of movement of the stock has been. This is what the cone of uncertainty is going to look like. And then they put a standard deviation on that. This is getting way above my head in terms of the mathematics, but they basically say, well, 68% of the movement is going to happen within this standard deviation. And then you're going to have 95% of it, within this standard deviation, and then 99% of it within this standard deviation. So when you get to like the 95 delta, you're kind of playing on that tranche of the second standard deviation and the third. And once you go out over the third, like 98% chance of profit, or like a 2 delta, you're basically not going to get a lot of money, right? So you're basically trying to figure out where you want to be within that cone of possibility for the stock to enter into execution. And to me, I'd rather keep my stock and write on it every week. And it might be slower money. You might get $15 a share that you're selling this on, or 15 cents a share. So $15 in total. But if I do that every week, right, it looks pretty good versus, well, let me go real close to the money. It's like, well, 565, that's not too crazy, right? There's a high likelihood this might actually happen. I'm getting $2.50 today, but what if it does execute? Do I really want to get rid of all my SPY shares? Then I'm going to have to pay taxes. Then I'm going to have to buy back into the stock. What am I going to do with the 300 grand that's going to enable if I do the whole options contract with that? So, I mean, because I'm running 5 contracts on SPY now, like, what am I going to do with that 280 or 300 grand, whatever it is, just that gets called away and they give me the cash and I have 300 grand. Am I going to write a put? Like, you gotta have to kind of have an idea as to what you want to do with it. So to me, I'd rather just, the way I look at it is eventually a lot of my portfolio is going to be in the SPY. And to me, I just basically want to be able to double or triple the amount of yield that I get from the S&P 500. And so if that's the case, I'm just looking to get 15 cents a week. And that's not, determined, right? Sometimes it might be 20 cents a week. Sometimes it might be 7. Sometimes it might be 10. But to me, I'm just looking to get 15 cents a week because I'm writing that and I'm getting that times 5. So 15 times $100, 100 shares of contracts, that's $15 times 5, that's $75. And say I get it done 40 out of the 52 weeks a year, that's $3,000, right? That's not a huge return, but when you think about it, I get to keep the shares. And 15 cents is pretty low. Normally it's a little bit higher than that, but you can kind of say, and actually it's way shorter than a week. Normally I would do this a week out. So let's do the September here. Solve the calls, and I'd probably do this 580. Maybe I would do the 575. Oh, it's because it's like a midweek. Yeah, let's do like a Friday. Let's do like the 27th. The 27th is going to have a lot more strikes. Yeah, here you go. So I would look for, I was wondering why there were so many. So yeah, you're going to get like 22 cents. So now you're talking about $100 every week. Luckily, if I get it, 40 out of 52 weeks, because not every week I'm going to write a contract. That's $4,000, compared to I have, what is it, 500 times 560. Yeah, like 280 grand. And I'm lucky if I walk away. So yeah, I'm basically trying to double the dividend that I'm getting from the SPY. Because right now I'll be lucky to get 1.2 to 1.5% dividend yield on the SPY. So, hey man. And the same thing with Palantir. Like you can do this on Palantir. Once again, I try to do it at the 5 Delta. I also try to do weeklies on Palantir because of its volatility. So, if I were to write this on Monday, probably look for the following, but it means you're far out, like you might not get a lot of premium. And I think this is saying that a lot of people don't think that if you're only getting 7 cents, that's pretty low. I think that a lot of people think that Palantir is going to top out right now. I anticipate if you were to look at the 95 on the put side, you're going to have a lot more. No, it's about the same. Okay. So interesting. So maybe it's just the implied volatility is really low on Palantir right now. Options prices have dried up a little bit, which is fine. So anyway, Mr. King, what's going on? Good to see you. Tim, Rocket Lab Rundown was good. Appreciate that. Hopefully you guys enjoyed that. I put that as the pin tweet for my current X portfolio. X posts, and made it 2 or 3 days ago. It's like an hour long, so apologies for the length, but a lot of people were asking me, like, what's the start to finish? Why are you bullish? What is it all about? And I anticipate that if you watch that, you'll probably be good. You'll have a rather rudimentary knowledge of the company. So convictions for stock is there. You completely understand pros, cons, buy in DCA. I don't know if that's a question, so I'm just going to say yes. Big thank you for explaining how Palantir works on hand during the early days. Hey, man, appreciate you, man. It's why I do it. Hopefully give some people some insights that might not necessarily be viewable for the public. This guy here is speaking about SoFi. I have some SoFi, about 2,300 shares. It's not a lot, but I think they're going to do well. They're just kind of getting towards profitability. They're in like their third or fourth quarter. I'm not too knowledgeable about that. I'll leave that to like Tevis and Tanner and Roy and all them. They know a lot more about the company than I do, but I anticipate it's going to be a decent one. They're going to continue to grow assets under management, so can't see that problem being in the problem. Been AWOL, sold out of your Rocket Lab, bought into him, so I'll get back in whenever there's a pullback. These low cap always have a major pullback, so let's fucking go. Hey man, it might, maybe it won't. Hopefully it works out for the best for you. Hims has done rather well as well, so you can't complain too much about that. So congratulations. Hopefully you were able to get wins on both. But yeah, I don't know. I've been wrong on Hims. So, and I try to tell people about that because I do make wrong predictions. But I do have it in the public portfolio with Chris Patel. For those of you guys that don't follow that, that's Cash Flow Chronicles. And we try to do that twice a week. And if you guys haven't followed that, I think the link is in the description of the video. So be sure to do that. We get into some disagreements and agreements on there, and it's a good time. A lot of additional pieces, but so I've been wrong on Hims. I was kind of concerned whether or not they'd be able to meet the demand, and or if the demand was artificially grown through the extensive reinvestment and revenue into marketing, and it seems like they're doing a really good job. So good kudos to them. But I would not personally sell Rocket Lab. But that's my bias because it's my number one conviction stock. That's where you're doing Ethereum. I DCA $25 a day until 10K invested. Yeah, man, I still have my $50 every 2 weeks for Bitcoin, and then I do $50 for Ethereum Classic. Whether or not Ethereum Classic actually goes anywhere, different story for a different day. You were looking at GTE, buying another oil company which were sold but didn't buy Friday. and just looking at it. GTE. Yeah, I don't know much about these guys. Colombia and Ecuador, huh? Could be okay. Yeah, it could be okay. I don't know. Really depends on. I just heard of some thoughts. I don't know if it's specifically this company, but the problem that you're going to have with Colombian natural gas is that there's such a demand in country for it, and they don't price it as well as they do for like European or Japanese. And so I think the local spot market's trading at like $5 to $7, which isn't bad, right? For gas. Oil, I'm not sure what they're trading for oil down there, but um, the problem is you're going to potentially have a lot of cartels pulling into and siphoning from the gas lines, which I've heard is a continued problem in the area. But we'll see. Yeah, good luck with this one. I'm staying away from oil and gas right now until we get a little bit more consolidation in the markets for that one. It's just futures, November, December, they're all looking down, right? I think like oil prices close at $68 for the week. Yeah, 68, 65 for the week. And futures are trading a dollar below that. So I think like November futures were trading at 67. December was trading at 66. And generally speaking, you don't see that. Normally, you see contracts valued up, right? Or at least flat. So to see them valued down is tough. Yeah, it's always nice to see the familiar folks in the chat. It makes it fun. Yeah, it's true, man. They're tiny, and I'm a big dude. I'm 6 foot, and then I'm also overweight. So it'd be tough. It'd be tough to fit in a Lambo. EV Hummer SUV is dope. I've seen a few of those in the parking garage at work. 2018 minivan, man. That's nothing wrong with that. Sometimes you got to do what you got to do. Here you can make some good money renting out Lambos to those YouTube influencers. I've actually thought about potentially buying some more expensive cars to rent out. You never know. If you go on GLP-1, you'll be able to fit. Don't give up on the Lambo. I'd rather have a jet or more beach houses. Did I talk about my top 3 buys? I have my top 3 positions right now in terms of individual stocks. It is Rocket Lab, Palantir, and let's see who wins out this week. Amazon. Yep. And that makes up, and I guess if you include Google in that, it makes up about $500,000 between those 5 positions. Sorry, 4 positions. But top 3 buys. I mean, I like Google here. I think Google's undervalued, and I think people need to give it more love. I think if you're talking about top buys for just 2024, 2025, I wouldn't put Rocket Lab in there. I think it needs to come back down. But if we're talking about for the next decade, I would put Rocket Lab in there. Bros isn't cheap, but it's not expensive. So I don't think I put Bros in there. Anyway. China's in a housing bubble, which the government telling cities to buy them while sitting on the banks in the USA and LA, saying people have problems like making payments. Interesting. What do you think about Tilray? Tilray. Isn't that like an MJ stock? I stay away from the MG stocks, man. No offense to you. All the power to you. It's just I don't have that expertise. Far-flung Brooklyn. Ha. Maybe. I've thought about it. Yeah, I've thought about it. CEO JP Morgan warns of economic fate worse than the recession, the worst outcome. Um, didn't he say the same thing like 2 or 3 years ago, and nothing really came to fruition? I mean, there was a short-term pullback in 2022, but that was also kind of like alleviating a lot of the excess cash that came in 2021. So, Francisco, my guy. Let's see. Kathy Wood sold all of her Palantir. Well, I don't think it's going to be bad. See you soon. Good luck at work, my guy. You're probably already gone at this point, but damn, I'm 30 minutes behind. Palantir doesn't actually get until the SP until September 23rd. We got Lisa joining. Let's see. Yeah, I'm like super far behind. Plenty of time for the month for another dip, which will happen when China worse. So this guy knows what he's talking about with China. I do not. Folks, rarely exercise a SPY contract for the divvy, baby divvy. I haven't had any called away yet. So when dealing with SPY contract that worth 56,201 for a second, no one cares about the 170. Hey man, you don't know. You don't know about that. I've had people call away stocks for that. Options learning curve flashbacks. $80 a share is 80 or $80 a contract is $80 a contract, you know. Let's see. Plan to buy a few shares of Google or Palantir, leaning towards Google with its recent dip. I don't disagree with that. I think it's good. Hot cannabis, man, my guy. Why not just buy Leaps? Completely different strategy. You could buy Leaps. I'm not against people buying Leaps. It's just depends on what you're doing. Could you go over selling put options? I feel like they could generate a bit more income from your hood shares. Thanks in advance. Love watching your videos. Sure, I can do that a little bit. MSTX. I think that's title 1.75 ETF. I don't have that, but I did just have Granite Shares ETF on the channel, and he has Microsoft long. I thought he had MicroStrategy. It might be in the UK or in Europe somewhere. But he just had that. Bucket list guy, I'm not ignoring your question. I'm just trying to get down to the bottom of the chat. But no, I haven't really looked at it. Yeah, it'd be more of a pain with bigger yielding companies for covered calls for sure. Yeah, definitely holding lots of Bitcoin. Never apologize for your length. Jesus. But why 2300 server? You could have 20 more Rocket Lab. You're a regular guy. Why be fancy? You're a good question. Good question. Big Dick Jonathan, what's going on, my guy? Didn't know I was that tall. Yeah, I'm 6 foot, man. Not that tall though. I mean, it's there. No Bitcoin. I have some Bitcoin. I have like a quarter of a Bitcoin in physical. And then I have about, I think it's 3/4. I think I have just over a Bitcoin. And that is in ETFs, unfortunately. So unfortunately, I'm losing a little bit to expense ratios with that. And some people might say you don't own your own keys, but I'm more so about the underlying value of Bitcoin rather than the actual transactions, because I live in the US, so the USD is generally about the best thing that you can use right now. Although I do see reasons why Bitcoin itself would be really good. Gap, which is a low PE of 10.5, which beat earnings the last 3 quarters with 15 dividend each quarter. Not exactly sure what you guys are chatting about. I don't know if you're talking about writing cover calls or what. What are the thoughts of dilution for Rocket Lab? Do you think they're well capitalized and don't need it? I think that right now they're well capitalized. They were running a little bit lean, earlier this year, which is why they also owed $100 million in a loan to somebody by June 2024, which is, I think, partly the reason why they diluted a little bit. There could always be dilutions, man. I think it all just depends on what they're going for. Between now and the next 18 to 24 months, I guess anything's really possible. Um, but to me, I think they have sufficient runway to get to neutron. I don't think they need to. I think right now the reason why they did it was because there's probably one or two additional acquisitions they want to take on within the next 24 months, and they're going to use that capital to potentially get after those. But I think once you get to the end, almost a year from now, you're going to be approaching cash flow break even. Once you get to that point, I mean, you might have to build some cash, but at that point, I don't think having a big debt position, not a big debt position, starting a debt position is a bad thing. Um, Specifically, if it helps add leverage to the company, but it's tough because if you're so early on, you can have some volatility. Any volatility within the revenue streams can show up in a pretty negative light. Next thing you know, you're unprofitable again. So to me, it's kind of 50-50. Do I think they're going to dilute again? I personally don't, but I didn't think they were going to do it the first time. These guys are a lot smarter and know the business a lot more than I do. And so originally I was kind of like, what the F is this cap call sort of thing? They'll hopefully be laughing in the end, right? My hope is that they actually use the cash rather than dilute the shareholder and don't actually end up using it. But I think they're just waiting for the right company to go bankrupt, personally. So, will they buy like an existing company that's working outright? I don't necessarily know. So, thoughts about the recent spacewalk? People said it was fake and robots. I think it was real. Yeah, I think it was real. Google has AI longer than the chip companies. Excuse me. Sorry, big yawn. Which can Google anything? I must give you the answer. I agree. I think Google has a lot more ability from an AI perspective than people give credit. ET FaceTime home. What do you think of a short squeeze plays? Hollow, swing reverse stocks with stay listed, and it's a big short squeeze play. Don't know anything about Hollow. I don't. Let's see. You have a signed photo of Buzz Aldrin of the moon made out to your dad. A friend of my dad's was friends with Buzz. Interesting. Oh, Buzz Aldrin, not Buzz Lightyear. I'm sorry. I've been streaming too long. Yeah, sometimes you got to add some primal screams to get where you need to go. So about puts, the thing that I would say about selling puts is only do it on companies you want to buy. And the reason being is, and also recognize that like you think a company can only go to one price, but in reality it can dip much faster and harder than you think. So to me, selling puts is more along the lines of buy the stock at a price that you would actually want to buy it rather than generate income. And that's part of the problem with writing options is a lot of times people will say, ooh, but if I do this strike, I'll make, $2,400. And it's like, to me, that's chasing pennies, right? You're going to end up potentially causing yourself a headache. It's one difference if that's your strategy, which is generate income, and you're willing to take on that risk to generate income. And that's when you probably should listen to more of like what TJ does, because he does a lot more with respect to income generation. And I do it for income generation too, but I do it as a secondary part of the portfolio. I'm not going to sacrifice growth of a position for a small amount of income. I'm not going to chase pennies and cost myself dollars, right? And that's kind of the thought process. I'm not saying cover calls are wrong. I'm not saying puts are wrong. It just goes depend on what your strategy is for your portfolio. So just kind of keep that in mind. So let's just take a quick look at like the S&P and what you might want to look at. You might pull like a 1 year chart and be like, damn, man, like this thing's out of control, right? It has to pull back at some point. And you could say, well, what if it pulls back to 495, right? What do we think? 495 would probably be a decent price at that point. That's probably when I would want to buy. And you might want to have like a reason why, right? 495 divided by 562. It's like a 12% drop. You're like, 12% drops don't happen very often, but that if they do, generally speaking, if a stock market drops 10% compared to where it was at all-time highs, it's likely that that's as low as it goes, right? And then you pick up at 12% and you pivot back and you do whatever. And I'm not saying that's what I do. I'm just saying that's an example. You could be sitting there being like, I've done the studies and 12% is when you need to buy. And so let's do that thought process. So it's about 495 on it. You could do whatever you want. You could do weeklies. You could do, whatever you want. But in this particular case, the hope is that you have $50,000 sitting around, or a margin account, which if you have a margin account, I'd be very cautious. But you could leverage your own portfolio to write this contract. And you could say, all right, I'm going to put aside $449,500 to capture this $21 in premium. And if within the next week and a half, it drops to 494.78 or below, then I'll basically make money on this opportunity. If it drops below 495, I have until 494.78 to break even and still make a profit. Or just if it expires above 495, which we saw was 12 or so percent away within the next week, then we'll just collect this 21 cents. So what does that actually mean, right? So let's do 21 cents. Let's divide that by 49,500. That's, let me just double check. 21 times 100 divided by 49,500. And then times that by, so that's a 0.04% return. So 0.04, if you were to do that 52 weeks a year, then you generate 2% on your money, right? But that's if you're doing weeklies, right? So keep in mind, you don't necessarily have to do weeklies for these opportunities. You could do a lot longer. In this case, let's look for like December 31st, right? So you're looking at the 495, December 31st. What does that mean for you? So you're going to get paid a little bit more. You're going to get paid 427, which is about, in this case, 0.8%, right? So let's do $4.27 times 100. That's $427 you're going to walk away with. 49,500 times that by 100. Yeah, that's 0.86%. So just by being 12% away, you're going to generate a drag on the port, not a drag, a positive uplift in the port by 0.8%, 0.86%. And basically, if the stock drops to, in this case, below $490, and if it drops below 495, you have to buy the stock, right? But if it drops below 490.69, you're losing money on the stock, right? It would have been better to just not have done the contract at all. You would have made money. But in the meantime, you're getting this $4.27. The nice thing about this, though, is if it doesn't, and let's just say in the next month, it kind of just sits there and is at 560 for the next month and it doesn't really move, there's something that we call theta, which is basically the time value decay of money in this particular options contract. So you're looking at $4.27. What this is saying is the theta for this contract, which is every day, right? It's a unit measurement of every day. If you were to basically hold this and this doesn't really move, it's at 561, this would close on Monday evening at $4.27 minus 0.055. Basically, it would close at 421. And you would potentially be able to buy that contract back for 5-6 cents less because the theta burn. And that's part of the beauty of it, right? Is you're the one writing the contract. The closer and closer it gets to this December 31st expiration date, and the further away it gets from this 495, the less likely it's going to happen. And so people will basically be able to buy it back for a fraction of the cost. So I love the SPY. I would write contracts on the SPY. In fact, I've done in the past. I told you guys I wrote one on Google for October 25th. Let's look at that one. And I wrote that one for, example, it was 91 cents or something like that. And it was the 125 because I was like, I would love to buy it at 125 if it gets there. And that's part of the problem, right? Sometimes people will write the puts. I've done this in the past. Write puts because they're like, I want to buy the stock, but I want it to be cheap. And then it goes up, like kind of like Google here. And you're like, fuck, I thought I was going to be able to get a buy. And here I am sitting here with cash and Google's now 157. I was hoping it was going to 125 and it didn't. But keep in mind, let's take this example. I wrote for October 25th. So this is like a month and a half. So let's just say you're able to do this 8 times a year. I did 91 cents times 100, which is 91 bucks, divided by 125 bucks or 12,000 bucks. So I got basically 0.7% on my money because I wrote like for 125 bucks a share, which correlates to $12,500 a share. Sorry, $12,500 a contract. And I only walked away with 91 bucks. So in that case, it's 0.7 of that total collateral. So it might not seem like a lot, but if I was able to do that 0.7 to 8 times a year, it's 5-6%. So you're kind of doing yourself a favor because you're able to buy Google at 125 bucks if it gets to that point and get yourself a decent yield. In the meantime, right? 5-6% yield on your money. Your money's just kind of sitting there. Not only are you getting the 5 or so percent in the money market account, but now you're also generating 5 or 6%, particularly while you're waiting for the stock to come to the right price. So it's not for everybody, right? Just because you can write options doesn't mean you should write options. And that's something I would encourage people to kind of acknowledge is like, it doesn't always have to work out, right? You don't always have to do these things. Just because the opportunity is there doesn't mean you should do it. So, let's see. Savici says, what's going on? Felipe, early 2026 said roughly 2 quarters after Neutron launch. Yeah, that's the hope. Make $3 million a month of passive income selling options. If you too would like to learn, please like and subscribe. You look like you need a nap. You look like you're about to get banned, my guy, because I'm not a fan of people doing this sort of crap. Yep. Too bad, my guy. Too bad. Well, that's too damn bad. Let's see. We won't even make you removed or block you. We're just gonna hide you. So you could just talk to yourself and think that you're talking. Don't mess with Matt or Texas. I agree. All right. Well, I'm losing people. I was up at around 100. We've lost some folks. Shout out to the one guy that's been hanging out on Twitch, watching under Real Matt Money. If you guys haven't joined Twitch, for me, it'd be cool if you were to follow me over there. I got a few people at this point. Let me pull it up. I'm probably gonna watch some shows over there. We got a guy. Hello, guy, watching over on Twitch. Yeah, let me put this over here. And if you guys do follow on Twitch or like Twitch or something like that, and you have an Amazon subscription, sign up and use your Prime subscription to like on that because I think I get paid off of that, and it's free for you. Like you don't have to come out of pocket. You get one free Prime subscription, which I think ends up being free. So if you guys are interested in supporting the channel and you have Amazon Prime, sign up for Twitch, connect up your account, and use your Prime subscription on me, and it'll cost you nothing out of pocket. So yes, we do have Finance Junkies in about an hour and 6 minutes. I'm going to take this opportunity to run downstairs, make a turkey sandwich, and heat it up in the air fryer. So just some pepper jack, some turkey, some nice white wheat-ish white bread. And maybe I'll go to the gas station and just take a little bit of a stroll to get out of the house because I haven't left the house today. And I want to check around the house and just double check there's no trash or anything like that. Sometimes trash blows in from the wind, but we got 2 people watching on Twitch. Really appreciate that. And if you guys could throw a Twitch subscription, that'd be really dope. Just do it in the lower right hand corner. Don't feel obligated. Don't feel like you have to. It's only if it's connected up to your Amazon Prime account, please. Don't come out of pocket. But of course, if you want to support the channel in that way, always feel free. Dutch Bros, man, I need to finish. Dude, I feel bad. Like I started getting back on writing again on Seeking Alpha, and I was like about to start getting after it. And Dutch Bros, I got like halfway through the article, and I just been dragging my feet for the past 3 weeks. I just got like writer's block, um, and unfortunately, with that, uh, haven't been able to write an update on Dutch Bros. But I plan on it at some point. And also the horrible thing was that the thing with respect to Dutch Bros that upset me the most is you can write on undercovered stocks, and on the undercovered stocks, um, depending on what it is, they might give you extra money. So they might give you 45 bucks, 50 bucks, etc. And somebody already submitted an article. So I was pretty upset because that means I didn't get the 45 bucks. So it kind of reduced my enthusiasm for writing on Dutch Bros because I was like, shit, I don't get the 45 bucks immediate. Dutch Bros is a good company. It just doesn't attract, like, it only gets 47,000 views over 90 days. So it's not like the Spy. Like, if you type in Spy, I don't even want to know how many views Spy gets, but Spy gets a crap ton. But I might also write on TQQQ. Somebody already wrote on that recently. There's a few companies that I've wanted to write on, but um, I don't have to wait. I can just write normal articles like for Google. I didn't really wait for the premium to come up, but it's nice to it's nice. You can make a little bit of money, man. Yeah, you can make some money. I don't really know per se. It depends on the article. You obviously need people to read it, right? So if you write an article on the most valued stock in the world and a lot of people somehow click on it, you're gonna make more money than if nobody clicks on it, right, and reads it. So there's that piece. Let's see. Not guilt tripping. Yeah, no, you didn't guilt trip me. Um, Drink recommendation. I like the sugar-free Rebels. I had a sugar-free Rainbow the other day, which I think is like strawberry, peach, and coconut, I wanna say, and it's not bad, and it's nice 'cause it's sugar-free, and feel a lot better drinking that when it's sugar-free rather than, the full strength. Well, the full strength tastes a lot better. Thanks for a great Saturday, Rocket Lab Weekly to this perfect, saw Ceviche. Yeah, Ceviche's a good guy. People unpopular telling, or tell videos. Wait, funny how popular or unpopular some stocks are, yeah. Tell videos I did, and we get 10x the views of anything else. Yeah, a lot of people for some reason were really attracted to Tellurian. I think sometimes when some of these companies go near bankruptcy, um, people get people get really fired up. And then, what do you think of this guy's main risk for Rocket Lab going forward to get to 30,000,000,000? I think it's Cadence Partners, how successful Neutron is. Is the space systems able to keep up? Will they be able to get the constellation figured out? How profitable is the constellation? Um, there's a lot of risks. I mean, execution risk for the next 24 months is gonna be up there. So, if you get over that execution risk hurdle, then I think that those are the big ones. But I like Haste. Yeah, um, Haste is gonna be a pretty good one. I just hope that it launches at a much greater cadence than Electron. I'm not saying Electron is bad and they're slow, but it's like it feels like it's slowing down, right? There was a pace at which it ramped up and I feel like it's hitting a velocity right now that's very dependent upon an industry that's strapped for cash, meaning small satellite providers, and they're all struggling to be able to put products out in a timely manner. So when you're trying to grow as fast as Rocket Lab is trying to grow and they have the capability to do so, you can't be at the mercy of small satellite producers, unfortunately, which is why I think they stated that they have to go with, medium launch vehicles, with Neutron. So, alright, my guys, I'm gonna, take the next hour off, and if you guys haven't already, um, head on over to Twitch, that'll mean a lot to me, and then, let me get you the stream for Finance Junkies later, if it's been made yet. It has to be because I know Carlos sent me. Yes, here it is. 2 people waiting, 58 minutes and 54 seconds. Yeah, the customer readiness for Rocket Lab has truly been an absolute abysmal issue that I hope gets resolved there, there pretty soon. So, peace out, my guys. Please be sure for the 64 of you remaining to hit the subscribe button. I really appreciate you guys showing up. Really starting to get a lot of love for these live streams. So it's either you guys are blowing smoke up my butt or you guys are actually truly getting value. And I hope it's the latter. I had a resurgence in subscribers um, over the past, I would say, month. Um, really, I guess it's been the past 2 weeks since I've started to be more active on YouTube. And a lot of times I think I just put so much effort into creating things for others and like through Palantir Weekly, Rocket Lab Weekly, and else that I forget at the end of the day that I have my own channel that has almost 14,000 people subscribed to it, that I should really try to give them the love and value and spread any sort of knowledge that I can. So you guys continue to be on the channel and supporting. People have been on here for 4 or 5 years. This channel's been around since, like, 2017, so we're going on, like, 6 or so years, and I would say I've done a horrible job continuing to keep up with it, so appreciate you guys sticking around, and, sorry, I'm getting the hiccups really bad right now. Imma go get something really quick and be back in an hour. See you guys on Finance Junkies. Cheers.